What does that mean to housing? Well, out of the last 5 recessions, pullback, 2 consecutive quarters gross domestic product, out of the last 5, 3 of them housing went up. Hello, Shane Willis, Pensacola real estate expert, bringing you today's episode. It's Thanksgiving week. That means we got a short week coming on. But I wanted to chat real quick with you because I've seen a bunch of stuff over the weekend, and I had some conversations with people about the economic recovery. And we were having some debates because if you remember the crash happened in 2008, we started an economic recovery. And we have now been in the longest economic recovery in our nation's history. So the debate obviously turns to how long can it go? It's one of those, if you win, eventually you know something's going to happen, it's going to lose. And so then, obviously, because I'm in the conversation, people start to look to me and go, well, okay, so when it does turn from a bull market to a bear market, when we do have a recession, how's that going to affect housing? And I found the Wall Street Journal actually just did a whole study. They asked a lot of the economic professors, economists around the country, when they think the economic slowdown is going to happen, when they think the recession is going to happen. Now, let me just, before I give you the answers, remind you, a recession just means a pullback in gross domestic product for 2 consecutive quarters. That's all that means. What does that mean to housing? Well, out of the last 5 recessions, pullback, 2 consecutive quarters gross domestic product, out of the last 5, 3 of them housing went up. One of them housing went down 1.4%. It's just the last one. The last recession we had where housing took the hit. And that's because housing is the one that led us into it. So it's not always because we have a recession will we have a hit to housing. So the whole reason for this debate was, it was actually an economics professor I was talking to who's on the fence about buying a property. And him and I had a good educated debate. I like it. I like economic professors. They crack me up sometimes. Anyways, this Wall Street Journal study said, when asked when they expect the recession to start, 42.5% of economists in the previous survey predicted, let me just see if I can read, projected between now and the end of 2020. The most recent survey showed the percentage dropped to 34.2. So it used to be about 42.5 said that we were going to have a recession next year. Sorry about that. Let me get some water. But now that's actually dropped down. Again, if this is the first time you've listened to me, I actually did a show last year, 2018, said Recession 2020. It was one of my most popular downloads last year. All right. And it was because all the signs were pointing to a recession next year. 2 consecutive quarters of gross domestic product being reduced. Pulled back. All right. Now that's down to 34.2. So the economists are still saying we're going to have one. It's coming, but it seems to be getting pushed a little further out, if that makes sense. It seems to say, hey, it may be a little further out before we actually see that 2 consecutive quarters. And Lord only knows what's going to happen next year because 2020 is an election year. So who knows what stops are going to get pulled out that year. But the economy itself looks like it's going to have a pullback within the next 2 years, 3 years maybe. And I'll show you a graph from the Wall Street Journal in the show notes that actually takes it all the way out to 2025. 7.3% of the economists think it's going to happen between 2023 and 2025. So we could be another 5 years in. Real estate, however, none of the real estate economists think that real estate is going to be affected even by this recession. Why? Because unemployment is too low and rates are too low. I'm going to do another show this week talking about rates. Wait till you see what I found because I'm kind of excited to share that with you. It was incredible. But with mortgage rates being that low, inventory being low, unemployment being low, you're just going to see appreciation continue for the foreseeable future in real estate. Are we going to see the multi-double-digit returns that we saw in the early 2000s? No. I saw the double-digit return in Escambia and Santa Rosa County as late as 2017. So don't think that was just a way back in 06 and 05 thing. No, 2017 saw 10.2 and 10.4. So we saw double-digit returns. 2018, not as much. It was about 6 point something. 2019 looks like it's going to be more like 4 or 5%. Just depends on the price point we're talking about. But in general, it looks like it's just being a normal market, which is exactly what we want. We don't want rapid growth. Our problem right now is inventory. That's our crisis right now. But I wanted to kind of bring up this economic debate that I had because A, I enjoyed it, and B, the fact the Wall Street Journal just came out with this just has something to share with you guys. Are we going to see it? Yes, but don't listen to the talking heads saying housing is just going to go bust. And there's not one housing economist out there truly saying that they think it's going to go down over the next 5 years. 100 out of the top 100 real estate economists say over 5 years, real estate is going to go up across the country. The South leading the way. Just the way it is. And it's hard to get further south than Florida. All right, that's all I got for you today. As always, if you've not subscribed to get the tips, tricks, graphs, infographics, get over to 5minutesinrealestate.com. That's 5minutesinrealestate.com. Also, get over to the Facebook page. I'm giving away 2 tickets to Star Wars. You heard me right. I'm giving away 2 tickets to Star Wars. Opening night. So get over to facebook.com/Shane Willis, the Realtor. I'm giving away all kinds of fun stuff over there. All right. Have a great Monday. Turkey Day is almost here.